Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Wednesday morning in Manila. We are about 1 hour into the first trading day of the second half of 2020. Let's go straight to our top story. The country's outstanding debt further swelled to 8.89 trillion pesos in the month of May. That's as the national government issued additional domestic papers and availed more foreign loans to bankroll the continuing fight against the COVID-19 crisis. The figure in May is up 3.4% from 8.6 trillion pesos as of the end of April. It was also higher 12% year on year. The Treasury attributes this to ramped up borrowing amid a sharp drop in revenue collections. State revenues fell by half to 151.5 billion pesos in May, bringing the 5-month total to 1.1 trillion pesos, which was 16% lower from a year ago. You can see on your screens here, local debt accounted for 68%, while the remaining 32% was from external lenders. Domestic debt was up 2.9% to 6 trillion pesos, while external borrowing rose 4.4% to over 2.8 trillion pesos. Still on the fight against the crisis, Cebu City remains subjected to strict restrictions under an enhanced community quarantine or ECQ scheme until July 15th. The city was reverted to an ECQ last June 15 after seeing an increase in the number of new infections. On the other hand, Metro Manila will remain under less stringent general community quarantine or the GCQ until July 15. President Duterte says there was, quote, substantial compliance of protocols in NCR. As of June 30, the country has so far logged 37,514 infections. Let's open markets together with the terminal here. You can see on my screens here the S&P 500 over in the US, at least overnight. So this was ahead of our trades this morning, extending the second quarter rally to 20%. So again, we had seen the last trading day of the first half of 2020 and also the last trading day of second quarter, and that brought the US stocks actually posting some gains, so double-digit gains in the US. That's amid US consumer confidence posting its biggest increase they've seen since yesterday. Futures in Asia in terms of the S&P 500 are actually slipping. There is still a lot of uncertainty, and you can see that in the very mixed performance that we saw over in Europe. One other issue that is looming is the EU and the United States. There's still a travel ban for U.S. residents going into the European Union. They say that the American response to the pandemic has been insufficient. However, the EU will be lifting restrictions for Chinese residents as of today on the condition that Beijing confirms the same applies to EU citizens traveling to China. So a lot of border controls being lifted, albeit very slowly. Now, if you take a look at Asia Pacific here, you're going to be seeing that it's been a bit of a muted trade, at least earlier on this morning. We're going to be checking in. I just want to mention here that there's a bit of a delay, or we're trying to fix that. And I'm trying to see how my terminal is moving. It's not necessarily moving right now, but Asian stocks are very muted right now. There's still a lot of concerns over the coronavirus spread and tensions, not just between the EU and the US, but also China and the US. Hong Kong today is closed for a holiday, and many are watching whether those protests will be happening today. There's still a lot of tension, geopolitical tension in Hong Kong. Now, one big thing to be watching out for this morning, and I'm just going to say that my terminal is very, very slow, is the IHS market for June. That's the manufacturing index here for the PMI, and that is at 49.7. Now, the bad news is that is a contraction from 1 month ago. Anything that's below 50 signals a contraction, but the good news is that that is higher from the contraction that we saw in the month of May. We saw the month of May contracting, and that came in at 40.1%. So you can see that we do see a bit of an uptrend from that sharp drop. It's a V-shaped drop and sort of recovery, but yet we are below that red line. So it's still nevertheless what we're looking at. But the good news is it's the highest reading we've seen since the month of February 2020. Output has been rising compared to the month of May, and it also reverses the contraction trend. New orders in terms of manufacturing have risen as well compared to the month prior. So some good news here. Let's now take a quick peek at our own local index. The index had actually opened in the green, but it's now sliding a touch. It's down 0.9%, so not necessarily following the rally of Wall Street. And I wanted to show this chart, which is the year-to-date chart. We've seen that, just taking a step back here on how our first half has been, that dip on March 19, we've since recovered. Actually, we are up 17% in just the second quarter of trades. And already yesterday, we were actually up by 1.7%. Now, Claire Alviar of PhilStocks is saying that performance yesterday was probably due to guessing. So we had for our 50 potential moving average, but there was a lot of bargain hunting that still happened yesterday. But as we can see, that does not seem to be continuing. She does mention the turnovers are rather weak. Yesterday, we only saw 6.5 billion pesos of trades. That's lower than the month-to-date average of around 8.14 billion pesos. And also the 8th straight day of net foreign selling yesterday. So there's still a lot of things going on. You've got Jonathan Ravelas BDO saying we must be, the odds are high that a historical trend, which is lower performance in the local bourse over the next couple of months, might be happening. Another thing that is being warned about, this is from PSE President Ramon Monson. He says that meeting their capital raising in the Philippines Stock Exchange, the original target, will be quite a challenge. He's saying that companies are delaying expansion plans and capex. Now, I want to take a quick peek at which ones are our leaders and laggards for the year to date. If my terminal cooperates with me, you can see here on my terminal that we are now at 5 companies that are in the green. So this has been a significant improvement from only 2 or 3 stocks, which were PLDT, Pure Gold, and Globe Telecom. But take a look at PLDT. That's up by 25% year to date, bucking how the local bourse, the index has been slumping by 22% or 21.27%. PLDT completely reversing that trend. But you've now got Metro Pacific also joining the leaderboard together with First Gen, which is up by 3.3% year to date. Still, you've got a lot of pain for most of our index stocks. Security Bank, for instance, shedding 47%. GD Capital as well, and Security Bank's not just the only bank suffering. You've also got BDO and Metro Bank also as part of the worst performing stocks in 2020 so far. Now, one conglomerate I do want to watch out for is LTG. So LTG, this according to their COO Michael Tan, is saying that the company is expecting the economic decline to weigh on all of its business units. So they've got, of course, under the LTG group, the biggest chunk is the tobacco chunk. So they have Fortune Tobacco, Philip Morris, but they've also actually got PNB. That's a big chunk of LTG. They've also got Tanduay and Asia Brewer, and also a property company, Eaton. So they're saying the purchasing power will be affecting the demand for these consumer units, but also the property side might be affected, especially since Eaton has tenants that will grapple with the leases, and you've got PNB grappling with non-performing loans and also slower demand for loans. They say that they will be keeping their capex the same for the time being. There are no expansion plans on the horizon. Taking a quick peek at how LTG has opened this midweek, it's down 2% to 7 pesos and 84 centavos. Now, I just want to take a quick peek at our bond market here. The SEC, recall yesterday, we actually had Eric Luchanko talking on as we actually, okay. You guys are back watching Business World Live. I'm Danie Laurel. Apologies for that. We had some technical difficulties. Nevertheless, let's go back to our markets. I was earlier, there's so many more bonds in the pipeline now. You can see on my terminal here, if I manage to share it, that we are actually seeing the yield curve sort of flattening. So the SEC, as I mentioned earlier on, is backing these social bonds. We had BPI issuing $3 billion worth of care bonds, which basically the proceeds will go to helping the MSME sector, which have already cost millions of people to be left jobless. Another one returning to the bond market is RCBC. They will actually be tapping the dollar bond market. They've secured approval from their directors to issue $300 million in dollar-denominated bonds to support not just the bank's lending, but also green projects. So a lot of sustainable bonds. We've also got Security Bank closing the bond offer ahead of schedule on the strong demand. They will close its offer of 2-year bonds July 3rd. That's on Friday. That is 1 week ahead of schedule. Planning as well to offer dollar-denominated notes. That's actually the latest in the pipeline that we've seen after PLDT had offered a landmark bond. You've got Jollibee as well offering that. The proceeds were not yet disclosed. The amount of the offering for JG Summit not yet disclosed, so we'll be watching that actively. Meanwhile, a lot of traders are very excited about these bonds. The BSP says that they have nevertheless also purchased. So 20% of the daily volume that's being traded are actually being purchased by the central bank right now, and that's to help the liquidity at least and stabilize the markets. Their 10-year bond yields, you can see on my screen here, have actually fallen to below 3% from 5% in March. It's actually a very exciting time to be looking at bonds, and more on those markets later on in the broadcast. Meanwhile, let's check in on other headlines we are watching in the middle of this week. As more businesses adapt to more flexible operations, the government is partnering with the private sector to identify at least 25 so-called digital cities that is seen to attract 70 billion pesos in BPO investments. This move is part of a 5-year program by the Department of Information and Communications Technology, IBPAP, or the Information Technology and Business Process Association of the Philippines, and Lichu Property Consultants. Under the program, the identified cities outside Metro Manila will be prioritized for internet connectivity and digital education. These cities include in Central Luzon, Calabarzon, and those in some provinces in Mindanao. The IBPAP said if the BPO industry is looking to sustain jobs in the sector amid the pandemic, there is a need to tap and develop talent in the countryside. The group, however, had to scale down its training program due to effects of COVID-19 from 4,000 to 5,000 participants to just 1,000 this year. Work from home capabilities are also crucial for most Filipino households, but the ongoing pandemic has just highlighted gaps and weaknesses in the country's connectivity. Survey from the UN Broadband Commission says only 3 from 100 people have fixed broadband subscriptions at home in the Philippines. Lawmakers have since ordered a probe on unfair labor practices amid the work from home setup. This is after reports of some employers refusing to provide their employees with allowances and subsidies, some even cutting wages for slow internet connection and reduced productivity. The central bank expects June inflation settling between 1.9 and 2.7%. That's from 2.1% in the month of May. The BSP attributes this to more expensive rice, as well as the rising pump prices of petroleum products. This is from the Philippine Star. BSP Governor Ben Diokno told reporters that these prices could be partly offset by slightly lower LPG prices and electricity rates in Meralco serviced areas. Inflation averaged 2.5% in the first for 4 straight months to 8.1% in May. Diokno said the BSP will continue to monitor economic and financial conditions to ensure that the monetary policy stance remains consistent with the central bank's price stability mandate. Based on latest assessments, the central bank's monetary board sees full-year inflation rising to 2.3% this year. The BIR said around 77% of taxes collected as of mid-June coursed through online channels as the lockdown coincided with the income tax season. The Bureau collected almost 665 billion pesos, that's in the first 5 months of the year, down 27% from last year. The Finance Department says the value of electronic payments have been showing an upward trend in recent years, with e-payments accounting for 84% of total collections in 2019. That's up from 80% in 2015. The number of tax filers using electronic channels likewise grew steadily over the past 5 years, rising from 25% of total filers in 2015 to 58% last year. Finance Secretary Sonny Dominguez said this trend shows that BIR's efforts to make tax compliance more convenient and accessible are slowly paying off. Dominguez also noted that more taxpayers had been filing their taxes electronically rather than manually even before the pandemic. He's confident that BIR's digitalization efforts will improve further. We've been so focused on equities and fixed income during this lockdown period. It's time to turn the spotlight towards our local currency and how the peso is faring during these rough economic waters. Here to share some insights, we have with us the founder of Global Markets Erudito, IFS Markets Philippines, Sachie Mitsui Turiano. Good morning, Sachie. Okay, I can't actually hear you. You might have to unmute your mic.
All right. Hi, sorry about that. Thank you, Danie. Good morning. Thank you for having me.
Thanks for being on the stream, Sachie. Just, kicking off with a very overall health check on the local currency before we dig in deeper. We're still the third best performing in the region. I'll try and pull that out in the terminal later on. Why do you think this is still the case? What's so special about the peso?
Actually, coming from the global markets perspective, as per the Department of Finance, we have strong macroeconomic fundamentals, and you can actually see that on our inflation data, despite of course, the lockdowns and the easing on demand. In fairness, we can still see that our inflation is, at least 1% range from our 3% target. So unlike other economies in the region, they are not at par with this performance. So somehow the local demand in the Philippines is still better than others. And more than that, if you take a look at the driver between the dollar peso and the rest of the emerging currencies, you can see that with the pressure coming from the major economies such as the US, the euro, and all that, these drivers continue to, these economies are doing massive stimulus in from their central banks, and therefore putting more pressure on their currencies more than in the peso. So it's more like, a combination of strong macroeconomic fundamentals plus weaker and more aggressive stimulus from abroad. So it's more of that. It's nothing really extra special for the peso. We are actually for
Okay.
among emerging economies. Yeah.
Very interesting. But are investors still betting on emerging market currencies? I mean, there's been a flight to safe havens. You can see Taiwanese dollar, Japanese yen, Hong Kong dollar. These are traditionally the strongest currencies, at least in the region. And every time there's an announcement of, like you mentioned, stimulus in the U.S., biglang they flock to the dollar, right? So I mean,
Yeah.
several strategies are saying it's gonna depend on all of these global factors to strengthen the U.S. economy, whether people are gonna buy into the dollar. So what is going on here? Is there still hope for emerging market currencies just as a basket?
All right. First of all, previously the first half of the 2020 benefited more for the EM currencies as yields were higher onshore. So it was more like more carry traders. They banked more on the differential on interest rates because
Okay.
prior to the because basically the US was more aggressive, right, as compared to the EM currencies in terms of actually toning down their rates and doing more stimulus.
Mm-hmm.
They're very aggressive. In fact, last week they just rolled in another 750 billion, second
Mm-hmm.
second credit facility for the US. So it's like they're very aggressive. That's why their yields are less attractive as compared to the EM
Right.
on ahead of the first half of the year. However, we've seen also that the emerging markets eventually followed suit, right? And we've seen
Mm-hmm.
last week we've had the fourth cut from the BSP. So basically, um, these carry trading may not however pursue because as you can
Okay.
see all the our our emerging currencies or emerging markets rather have also tried to do their part on making sure that volatility is controlled and price stability is maintained. So with that given, the yield in the emerging economies is not as attractive anymore. So that means that we can
Right.
expect, yeah, it's not as attractive anymore as before on carry trading. So that means that we may see some decline on interest on emerging currencies and
Mm-hmm.
more inflow on developed economies. And let me just add to that, especially that
Mm-hmm.
we expect the U.S. economy to recover following
Okay.
some signs of recovery on on their labor market. So yeah.
Okay, so actually downside risks here for EM currencies. But
Yes.
speaking of rates and just cutting rates and monetary easing, it seems that the peso, at least in my opinion, but you can give us more insights on that, has remained generally stable despite the 175 basis point cut, which you would expect actually that to have such a huge impact on that, and also even the triple R cuts, increasing
Mm-hmm.
liquidity all across the board. So there's so much supply of peso.
Yeah.
Why is our currency not? It's below 50 still, so it's quite strong compared to last year.
Yeah, I think if we are focusing on the dollar peso, this is really interesting. In fact, I'm forecasting the strongest peso by year end 49.50. So that is like,
Okay.
my yeah, that's the strongest peso for me. And the weakest by end of year will still remain at 51. But for the third quarter, I'm seeing it at around 50 pesos and 50 cents against the
Okay.
peso
Okay.
per dollar for the third quarter. And the reason behind this for me is because, as I have mentioned, there is more aggressive move from the US as compared to the Philippines, right?
Mhm.
So that means the what do you call this?
Even
The
with this
increase.
latest, even with the latest cut of the Bangko Central, even with the 50
Y-
dips. Okay.
yes, because if you take a look
Okay.
at it, it's a comparison between a major currency as compared to a local currency, which definitely has less liquidity. So even in the
Okay.
spot market, when we trade on it, it's always a battle between whose driver is stronger. So
Hmm.
basically, when you talk about the dollar, as we know, it's the king, right? So whatever movement
Right.
in the dollar side actually moves the markets more than it moves the peso. So even when we
Okay.
try to cut, yeah, even when we try to cut our interest rates even lower, if there are more major market movers from the US side, we won't actually feel an inch. So if in the US
Interesting.
side, we will, yeah, so if in the US side, they will be pumping in more stimulus, that is the time we will see 49 and 50 cents for the peso if they do that. But
Okay.
caveat, I'll give you a warning on this because lately for the past 2 months at least since May, there has been
Mm-hmm.
recoveries in the labor sector of the U.S. despite all the rallies and the increase in coronavirus cases. So despite that, there has been a trickle down effect on the improvement of their labor market down all the way down to their retail sales. So that means that there are signs that in the U.S. they are somehow recovering faster than
Mhm.
expected, right? So
Okay.
with that given scenario, you can expect that more global market players will watch U.S. more closely than the dollar. So for me, it's not really something extra special. It's just that the dollar always keeps everyone's eyes on it more than the
Okay.
peso.
Okay, and having said that, I mean, there might be more stimulus pa in the US, and we
Yeah.
actually might be pausing on the rate cuts. So we might actually
Mm-hmm.
be seeing even more strength on that. But what actually
Correct.
moves it then? So from the domestic front, do the remittances play a part here? Does the additional, like the liquidity might be mopped up if, for
Yeah.
instance, we open the economy and start importing and have the trade deficit at least bigger or
Mm.
what it used to be when we were still a growing economy. So does this factor into your analysis or what you're forecasting?
Yeah, definitely. Although it is normally short term, especially in this time of pandemic,
Okay.
the markets are really very volatile. So sometimes the fundamental data don't follow as immediately. All right.
Mm,
So when it comes to remittances, let's take into account that it was at least 10% of our GDP last year, and the World Bank themselves see our remittances contracting by 13% this year. So if you take into account all these items, and the World Bank even sees our remittances contracting, I wouldn't say no to that because they have heavier data right on the table. So I
right.
would rather talk about the effect of this toned down remittances to the local currency. I would say, to be honest with you, a weaker peso will actually boost the value at least of remittances. And right now, the
Correct.
strong peso is
Okay.
actually hurting remittances. So
Mm,
so as much as
yeah.
possible, if
You
the
don't wanna you don't wanna convert right now if it's below
yeah,
50. Okay.
Exactly. So it's like, the remittances are more valuable when the peso is weak. So it's like similar to the Japanese yen when the Bank of Japan uh, does its job at its best just to keep the yen low. It's something that we
Mhm.
could expect from the Banco Central if they plan to, target our remittances as a main source of income for the entire economy, in essence.
Yeah.
But right now we haven't seen that much aggressiveness. In fact, we are still around around the interest rate with cushion, unlike other economies
Okay.
who are now playing around the negative interest rates, but as compared to other emerging markets. But for us, if you can see, we still have that cushion, so that is a sign that the Banco Central is not really as aggressive as others. And to add to that, I believe so that no matter how much the central bank does, like the reverse repurchase, they haven't really started
Hmm.
printing out money, unlike in the U.S. But
Correct.
um,
Yeah.
it's really a matter of how the funds are being used up. Because no matter the
Hmm.
stimulus, if we do not actually put them into good use, then it's totally useless. Yeah.
Okay, so you're saying that there and a lot of strategists have said that we actually haven't had a formal monetary easing plan, diba? At least they're just
Yes.
stabilizing things, but they haven't really committed, as you mentioned, to complete monetary easing. Last point on that, on just the rates and also inflation. What about the oil story? With the fact that that's actually, well, it's already started going up, but it had benefited us to some extent, in the fact that
Hmm.
we're an importer of oil. Will that actually have a positive net effect on the currency, which is very linked to our inflationary environment, which the Banco Central has said is completely within the range?
Yes, I would agree to that. At a certain extent, as the BSPS actually forecasted, in the short term, imports on oil and of course the stabilizing prices in oil can somehow give give impact, or impact the local currency. So in a way, if we import more, we are literally actually selling the peso. So it will
Yes,
actually, strengthen the peso. Sorry, weaken the peso, and
weekend.
therefore benefit the remittances. So it's really, a chain of reaction. So if indeed we are easing out on the lockdowns and we will be importing more oil, while the price of oil actually moves higher, then somehow it can
Mm.
offset about 20% in that extent, but not really like overly,
Okay.
impacting the local currency to the extent that, hey, it's really going up just because of oil. It doesn't work
Okay.
that way.
Okay. It's nothing too dramatic in terms of
Yeah.
impact on the upside. Now, just to close, it's a very interesting discussion. Just generally on your platform, and on trading forex in a pandemic, in a period of volatility, and like you said, a lot of fundamentals are not being priced in and are difficult to be priced in, even if you wanted
Correct.
to. Is it safer? To be looking, this is a strange thing to say, but is it safer to be looking short term right now instead of looking at equities, which are more, difficult to price in long term, and even bonds?
Yeah, very. I love the question. Actually, as the founder of Global Markets Erudito, IFS Markets Philippines, it is high time that people diversify. We are not saying that people should, go all in a market where you can bank on a buy and sell perspective. Because in the forex market,
Okay.
it's a two-way transaction, right? When you buy a currency, you're actually selling the other. So you're doing a two-way transaction, making you benefit both the bullish and the bearish momentum. Unlike in the
Okay.
equities, there's you normally benefit when the market goes up or in the bullish scenario, and we don't have short selling here yet as legalized, so
Mm,
we cannot really bank on the downside. But um, in terms of actually going all in, I wouldn't really recommend that. I would say that yeah,
right.
it's always best to diversify, at least to make sure that you can hedge a bit of your funds
Mm-hmm.
into a more liquid asset, because right now the
Mm-hmm.
problem with the stock market is actually illiquidity, right? You can't
Right.
really trust the markets right now. I mean, there's a pump and dump, and it's really strange, so you don't want
Mm-hmm.
to be playing in that arena if you have a very small capital. So if you would interest yourself in diversifying, forex is actually something really promising. But always,
Mm-hmm.
as we always warn our students and all that, there's always risk to any kind of investment. That's why with GME, or Global Markets Erudito, as erudition is the term for taking people away from ignorance, we try
Okay.
to push people to really learn the business before getting into it, because it's not as easy as one, two, three. The difference
Exactly.
is, yeah, every business is not as easy as one, two, three, but when you put your heart into it, or you really get the commitment into learning that craft, definitely you will gain slowly but surely. So for
Okay.
me, yeah, it's high time for us to consider this, rather than, I always say this, we don't wait for the next crash. We prepare for
Mm.
it.
Okay, so thanks for those insights. Try and diversify your portfolio. This is actually a good time to be doing so, but be very well informed and do your research before jumping in with both feet. Thank you so much. That was IFS Markets Philippines' Sachie Mitsui Turiano.
Thank you, Johnny.
And that's a first look into this midday. Today is July 1st, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.